Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back to your daily crypto news and analysis. And today we are going to be talking about the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night wherever you guys are out there in the world. So the overall market, guys, night and day, but we knew that this was going to happen. We're going to talk about it, we're going to address it, and we're really going to go in depth on a few things happening right now around this space. So first and foremost, let's address Bitcoin. 62.7K, we reject it at $63,000. We're going to address 63K as a major resistance zone. Outside of that, altcoins in the top 100, there's a lot of green across the board. Some prominent ones, HBAR, the Graph, great projects. Stacks is up almost 12% today. Love to see these moves being made. Now, outside of those, right, if we go to the gainers and also the losers, and if we go to the top 500, you can still see some great moves across the board. In the last roughly 7 days, we have been seeing a lot of great movement across the altcoin market. And this is prominent because of Bitcoin dominance and what Bitcoin dominance has been doing, along with what Bitcoin has been doing. Now, are we out of the woods for altcoins? Are altcoins about to go parabolic? No, we are still going to chop a little bit longer. And I know that that sucks to hear, but guys, take it as an opportunity, not as a bad thing. Now, overall, in my video from the other day, and if we actually look back at this, right, Bitcoin was trading at about roughly 57.6K. Within this video, I outlined this post here, which was the US Treasury announces launch a buyback program for May to July quarter, first buyback operation scheduled on May 29th. Now, this was posted on May 2nd. Guys, we're 2 days out from this video. Bitcoin was trading at about roughly 57K. We're now trading at 62.7K. The title of this video was The US Treasury is about to pump the crypto market. And guess what? They did. And the reason why is specifically how the markets reacted to this announcement, which was the fact that, guess what? They have to print. They have to print money. Now, we're going to talk about that. We're going to address that here in a minute. But I want to go over the Bitcoin chart. I want to go over the DXY chart. And I also want to go over the 10-year chart. So let's start off with Bitcoin. So like I said, we're not out of the woods yet. The big news on Bitcoin is that we reclaimed 61.2K. That is that level that we held back in the middle of April. Also, we held it back in February, and we also held it back in March. This is a level that I actually want us to hold. Now, currently speaking, we are fighting resistance. Our resistance is about roughly $63,000. I don't think that this is going to give us too much fight, but I wouldn't be surprised if we had a pullback from here back down to this level. It's only about a 2.3% pullback, nothing too crazy. And then from here, we are going to retest higher. We need to clear this red zone, aka we need to break over 67K. And then after that, we still need to clear this upper resistance zone as well. All of this is resistance. And technically speaking, all of this up to about roughly 74K is resistance. Now, specific zones in here, we could outline them. So first and foremost, right, daily candle closes, our candle body is at 62.9K. We need to clear that. We need to get a daily candle close over that. The next area of resistance on this chart would essentially be flipping the support zone that we maintained back in March, back in the beginning of March as well. So this would be about roughly 63.8K. Again, not too much significant resistance there, but once we do break it, we should head to the next zone. Now, the next major target that we're really looking at is flipping support zone. 65.4K is initially the major target, but 65.7K is the big area that we need to clear over. And then the last major, this is the major resistance zone, before we head up to this roughly, 68.5K to possibly even like 70K plus, is 67K. We need to get a daily candle close over this. The candle body closes were around 66.8K. So a daily candle close over that level is a big sign that we are going much higher, but still we need to clear crucial levels up here. Initially, right, if we're actually looking at where we rejected in the past, This is the first major level, which is like 71 point almost 3K. We need to clear that. And then from there, we really kind of look at $74,000. So there's a lot of levels that we still need to clear over. And it's going to take some time. It's not going to be an uphill only battle. No, it's going to be, price move up into the resistance zone, chop, break down, get another move up, possibly get a breakout, chop up into here. Again, it's just all going to be a little bit of chop sideways. A lot of patience will be crucial during this time. But what we are hoping for is something like this, right? Where we chop sideways and then we get the big moves where it's pretty much up only for 3 days in a row or a couple days in a row. Then we chop again, up only. And, during this time, yes, there will be pullbacks, just like we saw in the beginning of March before a much larger expansion to the upside. But regardless, we are still expecting much higher price action. Now, is there still a possibility that we lose 61K and we come back down to $57,000? 100%. Guys, we're not out of the woods yet. We still need to make a higher high. Remember this. I've been talking about it on multiple videos now. Higher highs. We need to see higher highs. We also need to see higher lows. So what I would like to see is us avoid coming back down into these areas. Specifically on the daily candle close, we want to maintain above 58 point almost 2K on the daily candle closes. I would personally love to see a close above 61.2K, hold that level, continue higher, and then possibly even maintain roughly around like 63.7K yet again, and just continue higher. Again, very similar pattern going all the way back to this initial breakout to almost like 74K. We have this nice low. And again, focus on the candle bodies. Candle body close there, candle body close here. It's still a higher low. Also, candle body here. But the problem is that we were never making a higher high. So we never actually had a bullish structure formed. As long as we have higher lows, it's great, but we need to see higher highs. Overall, we're still in a macro higher low, regardless of any price action that we saw recently. Even down here, it's still a higher low on the macro wise. We still want to see a higher high though. And the biggest higher high will be us breaking over 74K. That will give us confirmation of us going to 80 to 100 to $150,000 on Bitcoin. Now, outside of Bitcoin, what's going to help it move? Well, first and foremost, the DXY. Guys, this is a dollar. We go back to Bitcoin. The reason why Bitcoin's going crazy and the reason why we bounce back so large is because of the DXY. Guys, this looks rough. Now, the big thing to focus on is the fact that we are back down into a demand zone. We are very close to this bottom trend line, which is where we would see a reaction. So something like this wouldn't be out of the question on the DXY. But what we're actually hoping for is the dollar to actually lose this bottom trend line and continue lower into our demand zone down here. That would be a very, very big move for the DXY, and it would actually be a very big move bullish wise for the entire market. Now, why are we looking at the DXY breaking down? Why are we focused on this? Well, outside of what I talked about in that video where we have the US Treasury now printing more money, because again, this is basically a buyback of bonds that they don't actually have the money for, so they have to print more money. And again, their target is $50 trillion worth of debt by 2030. Now, so far, we're already ahead of schedule, so I wouldn't be surprised if we start really heating up the printer press. We actually have proof that the printer press is already heating up, which we will talk about. But regardless, this is what's going to push the dollar back down into significant levels. We already rejected that upper trend line, which we outlined on multiple occasions. Now, outside of this, guess what? This is also bad for the 10-year bonds. This is the chart that I've been talking about for a little bit of time on the channel now. Remember, the weaker this gets, the stronger risk on assets get. Now, you could look at this on the weekly like this, or you could possibly draw a trend line from over here like this, so that we even go lower. Either way, what we are expecting is a much larger breakdown on the 10-year bond. And what this means is, guess what? Risk on assets are very, very bullish. And again, very similar to the dollar, this is rejecting that upper trend line. Now, why do I think that this is going to continue to break down? Why do I think that the dollar is going to continue to weaken? Well, it's because of what we continue to see. Outside of the printer press, right? Check out the M2 money supply. So like I said, this is showing us that the printer press is on. It is increasing. It is now flipping positive. I said, let me repeat what I said the other day. Did someone say liquidity? Because I quoted this post and I said, did someone say liquidity? Now, if we look at this M2, we can go all the way back to 2020 and even 2021. Look at 2020 when this started to really ramp up, and look at what ended up happening for risk on assets in 2020 into 2021. They went absolutely parabolic. This is going to cause the market to absolutely go crazy, and we're talking about the upside, right? Now, outside of this, guess what? We just got a big announcement. So breaking, Dow futures soar over 500 points after April jobs data comes in significantly below expectations. Not only did the economy only add 175,000 jobs, but the unemployment rate rose to 3.9%. Now, is this good? Is this bullish? No, guys, this is what I mean about the short term and the macro. Macro-wise, the economy looks terrible. That's why we will see a surge before that major sell-off. This is why I say, and I cannot stress this enough, make sure that you are taking profits along the way in this bull run and buying things of value that's going to maintain its value and be a hedge against a recession or against a major crash. Now, what could those assets be? What could those things be? Well, it could be gold, silver. A lot of people have been waiting on real estate. I do think that real estate will crash when we start to see the macro, economy really implode, because it is happening, right? We're starting to see things break. I know that everyone has been waiting on a real estate crash, and everyone's been saying, no way, we're going to avoid it. But they said the same thing back in 2007, 2008, and what ended up happening? Well, I'll let you guys I'll let you guys answer that. But regardless, this is not good. It's good for markets, though. It's good for Wall Street. It's good for markets. And that's why in the short term, we will continue to see us go parabolic. Now, we have on Wednesday, Fed Chair Powell said substantial weakening of the labor market could prompt rate cuts. We now have a weakening labor market, lower GDP growth, and rising inflation. How is this a soft landing? And here we have the Dow futures surge over 500 points after jobs data comes in weaker than expected and unemployment rate rises. This is essentially us leading into a possible blow off top. This is us possibly leading into a massive rally right before the end of the year, just like I've talked about how I'm expecting us to top out sometime around the end of the year. That way, when we look at 2025, 2026, after elections, we get a major black swan crash, and it wipes out the market. That's what we're really kind of watching for and we're prepared for, right? Because it's not guaranteed to happen. We prepare for things. We prepare for the unexpected. Everyone's still waiting on 2025, 2026 for a topping point for this market. I'm just not seeing it, but maybe I'm wrong. But we also have, if anything, this jobs report is more evidence that we are entering a period of stagflation. If higher unemployment prompts rate cuts, inflation will continue to rise. The Fed is heading down a dangerous road, and 100%. Now, someone regarding finances, like a finance guy, responded to this, and he said, I want you to think this through carefully. Today, the stock market will be up big because people can't find jobs. Think about that. Wall Street is cheering that things are hard on you. Why? Because it will, they hope, force the Federal Reserve to lower interest rates, which gives them cheap and free money to go back to the trough and also eat until they burst. There are times where he hates his own industry, and yes, this is why when we look at what's going on, right, it's not good for everyday individuals. It's good for the markets, and yeah, sure, it's bullish, but think about where we are headed in the long term. I don't think that everything crashing around us while the markets continue higher is a great thing. But this will cause the markets to surge even higher and higher and higher. And eventually we will get to that point where we top out and a major sell-off does happen. A major wipeout will happen. But for the meantime, yeah, we look at what is going to happen around the space. It's not bullish for everyday life, but it is still something that we are focused on. And at the end of the day, yeah, things will continue higher. That's the overall thing to focus on here. But definitely keep a close out on the macro, because macro wise, guys, I do think that we're headed into a possible major crash sometime around the end of this year into quarter one or possibly even quarter two of 2025. So definitely focus on the much bigger picture here. Now, outside of this, what about the altcoin market? Well, the altcoin market and also even the total, guys, this is what we look like on the weekly for both of these charts. We are just ranging here. We've been ranging for a little bit of time, and so far, this is playing right into what we have been focused on for a little bit of time, which is just ranging, chopping, waiting for the big move to the upside. Like I said, with everything happening, with everyone betting big on the DXY going down significantly, and what's happening around the economy, yeah, I do think that markets are going to continue higher. I think that this is going to give us enough fuel to actually push significantly higher and have a complete full breakout. The big thing on the total that we're watching for is breaking over $2.4 trillion like we did just previously. We hung out there for a little bit of time, but ultimately we broke back down. I'm really watching for a few levels here. Ultimately, we are still targeting the all-time high on the weekly, right? If we look at the lower time frames, you can see where the resistance was. That's where we actually kind of topped out here. Resistance was right around this level. We kind of topped on a few candles around the May 2021 candle wick here. But regardless, we're still expecting this to have a major push above key levels and target a new all-time high for the total market cap. And I do think that that's when we start to see the herd really coming back into crypto. And that's when we start to see much higher price action. But regardless, people are looking to get their money out of the banks, out of the dollar, and they want to park it in somewhere else. And they're parking it in specific things like Bitcoin, stocks. You know, this is one thing that I mentioned. All during 2023, money market funds have about like $6 trillion in them. Guys, that money is going to flow into other areas, like, for an example, crypto. The ETFs are a great example of this as well. So outside of everything, the key thing to take away from this video is, yeah, sure, we're going to go much higher. Guys, they are pushing us much higher. The Federal Reserve is essentially going to push us much higher as well. But the US government is really kind of causing a much larger bull run, and it all is happening because of us massively printing while we already still see inflation brewing at a massive rate, but we're also now seeing pretty much zero job growth. Unemployment is rising, and you know, we really need to focus on the macro as well, because the macro is not looking pretty. So in the short term, like I said, taking profits, making sure that we are paying ourselves is so damn crucial to focus on. Now, am I taking profits anytime soon? No, I'm not. I told you guys, when I really look at the altcoin market, I'm DCing out of altcoins up here. I will take profits if profits are good on some of the altcoins, right? Because again, there's always going to be major winners out of the bunch that break out before we get into these areas up here that possibly do 10, 20, 30, 40, 50x returns while we're still ranging or even starting to break out. I will be taking profits from those positions, because if the profits are good enough to change your life, why not take them? But regardless, I am taking profits, making sure that I'm parking my money into things that are going to maintain value or possibly be a major hedge against a recession. Now, I know what you guys are probably thinking. Does that mean Bitcoin? Not necessarily, right? We already know how Bitcoin did react during 2020. We know how it did react during times in the previous cycles as well, where, you know, things got a little bit hard in terms of the economy, but nothing like 2020, right? 2020 was a rude awakening for anyone out there that was a Bitcoin maxi. Like, yeah, we did see a major pushback on Bitcoin in terms of price action. Now, did it bounce back in a big way? Yeah, 100%. But again, the reason why we saw that was because we were in the middle of a new cycle, and also we started to see liquidity increasing. Liquidity started to increase heavily during 2020 into 2021. Let me go on the weekly as well and just kind of show you guys what I'm talking about. So during this time, right, this was when the pandemic hit. We had a massive sell-off. Liquidity started to increase, not decrease, increase. During something where we are going to see a major recession, a major crash, like something like 08, right? We will start to see liquidity drying up. Without proper liquidity, well, guess what? Bitcoin's not going to go up massively in value because there's not proper liquidity there to push it higher. Right now, the reason why we are going much higher is because of liquidity. That's the big thing that I told you guys to focus on, is the liquidity chart and the liquidity index. So with that being said, make sure that you guys are prepared to take profits. Make sure that you guys are paying yourselves. focus on the macro in the short term. Yes, I do think that we go higher. So with that being said, I hope you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on because more free content. You guys are more than follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.